Hi, good morning. This is Julie. Going to be looking at the crude market, what happened on Friday, and going forward with the week ahead. And I'm going to take a look at a simple strategy to trade in crude that's quite successful. Um, we had that divergence going into Friday's session that I knew that we would have a pullback, a reversal, and sure enough, price turned around and came back to the test, the trend line of the breakout. We've got our daily chart that shows the doji where price came down to test the breakout and then came back up to settle in the middle of the range. So that establishes still we've got some strength in this market. We've got buyers that were able to come in and push this back up at that trend line support at the breakout on the daily. And this stochastic right here has gone back and taken out that previous divergence, which is important. So this shows strength in the market is still here. So after a pullback on either Globex or early pre-market crude, the close is up here. I'm going to be looking for a breakout on Monday. I'm going to be looking for this area right here to get filled in between 59.25 and 59.60. And then this point of control here, I'm going to look to have that taken out, this extended VPOC. And then I'm going to look for a breakout on Monday. And I am going to be looking for price to get over this level and enter into this area here and start filling this in between 59 and 64. So I'm expecting a skip through this pattern. If this doesn't break out on the high very early Monday or Tuesday and stalls and continues another flag pattern sideways, then I'm not gonna, expect anything other than range trading. There's nothing to do but sell the high and buy the low. But I really am looking for that breakout because the strong momentum pulling this back up past the divergence. Okay, so that level was exceeded, met and exceeded. So we have strong momentum. So I'm expecting a follow through when a price comes back a little bit on that first reversal, that KD cross. That's what I'll be watching for, and I'll be taking that up past this level. That's what I'll be looking for early next week. To show you a little strategy that I use when I trade outside of value, that is very simple, has two components. You have price and 100 comparison solver. So you want the close to be above or below the EMA 100. Very, very simple. And you want an inflection solver, which means price is reversing a closing price at the EMA 55. So when the EMA 55 inflects and price is above or below the 100, with crude oil, the way crude ping pongs up and down, it flushes down and then pulls back and flushes down and pulls back and flushes and pulls back. This is a very good strategy to trade for crude with those two simple rules: price compared to the 100 EMA, and then you get your 55 EMA inflection. So when that happens, as you can see, we had one little 02 to 05. We had a 3-tick heat, and that was it. On this, well, on this signal here, maybe more than 93 to 07. You might have gotten a stop out on this one, but otherwise these were all clear winners. And to show you how effective this is, just moving the chart back, this is a very good way to get long in crude. On the after these pullbacks, just wait for those 55 EMA inflections, because of the way that crude trends. Now, when you're inside the range, this will not work because it's a two-way trading inside the range. So you want to take these patterns when price is outside, inflecting outside value, like right here. So outside value is the way to trade this, not inside the range. Inside the range, this will not work. But when price is trading outside your value, it's a very effective method for timing these pullbacks. It's like, how do you know when to take a pullback in crude? Well, wait for the 55 EMA inflection. So you can put a 55 EMA on your chart, which is right here, and just wait for price to make that turn at that EMA 55 and then get back in and hold it. Okay, so that's a very, very simple and effective method for taking these pullbacks in crude. So I just thought I would share that. It worked out real well on Friday's sell-off. And then when price comes back, you can see that that's no longer effective because price is now returning into value. So that's what I have today for Saturday for my look for the market. I'm going to be waiting for a pullback K cross D to come back up and take out yesterday's or Friday's high. And I'm going to be punching it long and hope to make some money as this clears this level that price has been trying to get out of for a long time, since February. So we punch out of here, get into this level, and start trading up here. If it fails and starts going sideways, there's nothing to do but sell the highs and buy the lows because you're still in a range. But I do think this is going to be a breakout. As again, who knows? I mean, I certainly can't say for sure that this is going to happen. I'm just saying the momentum is there, and that's the way I'll be planning my trades, my trade plan. Thank you very much.